Good morning, Australia. We've just closed out the most volatile week of 2026. The geopolitical fog of war turned into a lightning strike for financial markets last night. Wall Street was smashed, oil is pushing toward record territory, and the ASX 200 has just booked its third consecutive weekly loss. I'm Jay, and this is the Oz Stock Watch Weekly Wrap. Wall Street was a sea of red last night as the Iran war premium hit a breaking point. The Nasdaq slumped 2%, the S&P 500 fell 1.5%, and the Dow lost 444 points. The trigger? Reports that the U.S. is preparing a potential troop deployment to the Middle East. We saw a massive risk-off move. Investors dumped tech and even gold, which had its worst week since 1983, fleeing instead to the safety of the U.S. dollar and cash. The VIX volatility gauge surged 15%. Signaling that the market expects a very rocky path ahead. Locally, the carnage was concentrated. The materials sector is now in a technical bear market, having fallen over 20% since this conflict began. Iron ore giants like Rio Tinto, 2.9%, were hammered yesterday as the global growth outlook dims. However, it's not all red. Energy stocks have surged 16% since the war started. Woodside and Whitehaven Coal, plus 3.9%, are acting as the market's only lifeboats. We are seeing a historic rotation. Capital is fleeing growth sectors like tech and retail and hiding in old-world energy and defensive health like CSL, which managed a rare 2.9% bounce yesterday to finish at $138.50. The macro driver is the de facto blockade of the Strait of Hormuz. Roughly 20% of the world's oil is currently stranded. Brent crude settled at $112 per barrel last night, a 48% surge since the war began. While the U.S. temporarily lifted some sanctions to ease the pressure, the market is pricing in a worst-case scenario where oil hits $150. This is an inflation nightmare for the RBA. We are now looking at a potential cash rate of 4.85% by the end of the year, a level not seen since 2008. To make matters worse, our own labor market is sending mixed signals. Unemployment rose to 4.3%, but we added 48,900 jobs, shattering forecasts. In a normal world, that's a strong economy. In a war inflation world, it's a reason for the RBA to keep hiking. The Aussie dollar is barely holding 0.70, and if it breaks lower, our fuel costs at the pump will soar even further. The 8,400 support level on the ASX is currently under siege. If it fails on Monday, we are looking at a vacuum down to 8,250. Take the weekend to de-risk and reevaluate your energy exposure. We'll be back Sunday night with the Monday Open strategy. Stay safe, Australia.